Good afternoon, reader. This is the Oak Bloke, and I'm covering Idea Belluscura, and see if I can work out and remember how to share my screen, which haven't had to do whilst staying in the North Pole. It's amazing how strong the sun can be in these Arctic conditions. But anyway. Right, so Belluscura. Just about to launch this article, and I thought I'd talk it through and talk through my reasoning. The point of this article was Friday's RNS, which is a fundraise that they've announced, and the share price went and did that in response, which of course is a big drop. No two ways about it. So I guess my as a Belluscura shareholder, my reaction to that was to say, well, do I dump it? Do I keep it? Or do I add to it? Do I buy more? So which to do? And I suppose if you're not a Belluscura shareholder, Belluscura is a business that generates and produces portable oxygen concentrators. So two different models. The Explorer is kind of their cheaper, smaller, lighter portable oxygen concentrator. The Discover is their newer product, but this is one which provides continuous flow as well as occasional flow, so it's a variable flow. So there's two different models that they sell. There's then batteries, and you have cartridges. The gist of these products is that they will take fresh air, basically strip out some or a lot of the nitrogen, which then obviously leaves, if you know basic physics, that about 21% of the air is oxygen, which is why we breathe air. So yeah, if you strip out the nitrogen out of the air, you obviously get more oxygen, and that's the gist of the business. Is and for somebody that doesn't have that, I mean, they're sort of doing something like this, heaving around a big heavy oxygen tank, and you might have seen it in films where someone's sort of carrying around an oxygen tank around their living room, and sort of gasping for breath because they've got um, limited lung capacity, and the market is huge. I mean, this is a competitor product, but it's quite useful because they sort of present some very interesting stats, which I've included in the article. So just to kind of show you, 450 million sufferers of COPD, and that number is just growing and growing. Sixth leading cause of death. Huge cost to healthcare in the US and elsewhere. You can see the numbers there: 15 million visits to the doctor, 1 million A&E, ER, emergency room visits in America, and 0.7 million hospitalizations each year. So huge cost to the economy. And good old Doge should be looking at this and saying, give everyone a Belluscura POC, and we'll save the government a lot of money. And in fact, that's not just the Oak Bloke saying that. There was this research, 2024, last year's research from Glaise, Mercier, Coutier, and Petrica. I think I've pronounced those and haven't butchered their French names too inaccurately, but it was a French study based upon the value of POCs, and even taking into consideration the cost of a portable oxygen concentrator, a POC, it reduces health costs by 4%. So net benefit. So DOGE, the good old Musk and his posse should be looking at this and saying, let's roll this out to everyone and save 4% of the US healthcare costs. There we go. According, if assuming these French researchers are correct, but you know, above and beyond the cost, above and beyond the cost, it reduced mortality. It's better for the people, better quality of life. It means you can be the smiling man that walks around with your gadget slung under your arm, rather than you know, heaving it into the. I'm not kind of sure what happens here, where you know, probably heaving it into the boot of his cars. Uh, um, you know, somebody that's got reduced lung functions probably not the right person to be manually lifting heavy objects, is it? So there we go. Anyway, back to the article. So lots of things to cover in this. So as you possibly know, whilst I did very seriously think of just and this was before the drop in price, by the way, of just calling it a day on Belluscura. I sort of spent quite a bit of time. I'd gone back over all my old articles, which, by the way, when you go to the Oak Bloke Substack, so it's theoakbloke.substack.com. When you go there, this little magnifying glass is your friend if you want to look at past articles about Belluscura, for example. You can just type in Belluscura, and it will give you all of the articles, or all of the articles that have the name or contain the text Belluscura. And you can see here I've covered it over, you know, over 12 months, 15, 18 months. I think my oldest articles going back to September 23, something like that. So I've covered it for a while, and yeah, you know, there's been sort of setbacks and a couple of different fundraisers, and it was one of these sort of catch 22s where the slowness of the fundraise actually then meant that they needed to do another fundraise, because the the fundraise they did kind of kept the lights on because it took so long, even though they were told it wouldn't take so long. So it, it has been frustrating, but not all of it can be laid at the company's door. You know, that their lawyers said that it would be a quick process, and the process took best part of 6 months. So should you blame the management for that, or should you blame, you know? Uh, and I suppose that's the thing you've got to feel comfortable with this share is whether it's um, doomed to fail, or whether it's just kind of had some pretty bad luck, and is now on the cusp of greatness. So that's the thing to decide. So what I did was I looked at the current shares, which is 199 million. I looked at the placement that they're, and by the way, the firm placement is what's doesn't need any kind of shareholder agreement, whereas the conditional and the wrap is then subject to a shareholders vote. So you know, it's the will turkeys vote for Christmas? Will shareholders vote for dilution? I believe they will, and this is why this video covers why. So the dilution does raise 5.4 million. There's then separately and previously some trade finance. So in terms of new funds, new firepower they've got available, you know, best part of 10 million, uh, which, you know, is a good slug of money on top of the um, the and the reason they want to raise this money is not to keep the lights on, but to basically to invest into inventory and working capital, because they've got a large flow of orders, they tell us. So the mathematics of this dilution, because that's important, of course, looking at so this is the last financial results, which is 30th of September 24. uh, the this is dollar millions, so the NAV was 18.66 dollar millions, but that included a big slug of intangibles. Now the intangibles is basically the capitalized product development. So, you know, all the money they've spent investing in and developing the Explore and the Discover. You don't just necessarily write that off to the profit and loss in the year that you spend it, but you sort of say, well, I reckon this Explore will provide me 6 years of sales, let's say. And sorry, I don't know exactly the rev rec. Oh, sorry, the amortization of the intangible, but I think it's a couple of percent per year. It's there's a fair chunk of recognition, but say it's 6 years. I don't know that's the exact percentage, but then 10 million intangibles, I'm going to write off 1.6 million per year for 6 years to account for the fact that it's got a 6-year product life, and at the end of the 6 years I need to go and invent a new gadget to replace the Explore, because it's kind of, and that's the gist of why there's 10.9 million of intangibles. So it's money that's left the building, it's been spent. There's no, you can't sort of, other than you've got the patents, you've got the know-how, you've got the obviously the product design and all of that, which you could potentially sell to somebody. So you know if you sort of say that's worth nothing, then back in at the last accounts there was 7.76 million, which was 3.9 cents per share, and obviously 1.25 to the pound. I mean, you're looking at just over 3p of assets, tangible assets, or about 7 and a bit p of net assets. And the share itself was trading quite steadily at about 9-10p, dropped down to I think 6.5. So there was probably a little bit of leaky people selling ahead of this raise, which is annoying, but it's yeah, and then obviously the 70% drop was to take it from 6 to 2 on the news. So this is kind of how the balance sheet looks, and all I'm doing here is I'm taking the cash that's raised, this 9.4. Now this 9.4, some of that is obviously increased creditors. This Sally Port is an increased creditor, so some of that cash is not extra cash, it's balanced off by a negative. But net, because obviously net asset value is net of the extra creditor, what we end up with is 24 million. So it's increased by that 5.4 million essentially, which equates to 13 cents per share. But because we're now dividing it by 416, not by 199, what we see is the per share, it's reduced down to 3.16 cents from 3.9. So that's a 0.74, 3/4 of a cent drop in the tangible net assets following the raise. So there's that's what I call the lose. That's what you lose when you work it out mathematically. However, you've also got the opportunity through this bit, the wrap, to participate. And this was my kind of thinking here, was I was thinking, well, okay, but I can spend 2.5 cents to buy 3.16 cents worth of assets, tangible net assets. So this isn't, the intangibles. This is just literally like cash in the bank, stock on the shelf, debtors outstanding and owing money that will turn into cash. So I kind of looked at that and thought, well, actually, that's, I'm getting it at a discount. And I kind of then said to myself, well, what's my break even? So if I've got, say I've got 10,000 shares, how many new shares do I need to buy in order to kind of, the 0.73 cents loss is offset by the 0.66 cents gain? And the answer there in 0.66 divided by 0.73 is 111%. So you've got to sort of, if you want to lean in and not lose out, in the sense that you're still holding the same assets that you held before, what you've got to be happy to do is to lean in and buy 111% of what you had before. So if you had 10,000 shares before, you need to say in the wrap, and the wrap is only until 2 p.m. tomorrow being Monday, the 10th of February. I'm recording this on the 9th of February. So you've got to kind of say, yeah, I'm going to lean in. I'm going to do 111%, 11,111 shares. And then essentially you're no worse off than you were before, other than obviously the share price at the moment is lower than it was before. But from a like, if you don't look at it from the point of view of what's the share price selling for today, but you look at it, what's the value of the assets that I own? What do I own for my money? You can actually sort of come out of this um, with what you had before by participating, and that's kind of my logic, and that's how I've decided to do it. Is I sort of said, well, I'm going to go in at 111%, and then I'm obviously further committed cash wise, and before I did that, I sort of thought about a couple of things. I thought, well, who else owns this share? What are they going to do? Like, it's pointless following on if the vote gets thrown out. So, well, who else owns Belluscura? So the answer was, this list of people, various different high net worth people. You can sort of see there's a number of them that are associated with Domino's UK, and I don't know exactly how successful Domino's UK has been, but I don't know. Everywhere I drive around, there seems to be a Domino's, so I'd say it's a pretty successful franchise. Um, Successful business. So these people, and this list up here is this list here essentially. This is what they own. So they own 48 or 47.5% of the shares, so nearly half. So like my rationale was to say, well, what will these lot do? Are they going to lean in, or are they going to lean out and sort of harumph about the fact that the share price has dropped? Like, how will they react? And I don't know how they'll react. I mean, I'm just that was my thought process to kind of think, well, what would they do? And I sort of thought, well, they'll do what I did and work out like what the assets are worth and what the but also to kind of say, well, what's management doing in all of this? So, and I thought this was interesting. So there's a bit of a musical chairs going on with who's going to be stepping away. So overall, I think there's a reduction of cost from the looks of things in terms of fewer directors and fewer mouths to feed. But the one person who's been stepped up in all of this is this chap here, and I've put a link here to that person's LinkedIn history, so you can kind of see for yourself. Basically, he's sort of done business turnaround after business turnaround over a very long period of time. So I kind of looked at that and said, well, actually, that seems like a very credible person to be spending 8 days a month out in the US operation to push Belluscura forwards. That's just my opinion, but I kind of felt happy about that that person's and they get some options. So there's an incentive if they can push the price from a lowly 2p tuppence to 40 pence, which is of course a 20 bag. That kind of works out at 1.6 million. So 4 million shares at 40 pence. 1.6 million. Okay, so you know that that to my mind gives somebody an incentive to go after it and give it some welly, which is good, which I'm happy with. And this I was happy with as well when I looked at the that this is the shareholding as of the last accounts. So quite a lot of quite a lot of participation, to be fair. This Tucson chap didn't have any skin in the game, but has committed some money into it, so now owns 0.16 of the company. Overall, the management now own over 7%, so they've leaned in heavily. Some of them, like myself, from the looks of things, have kind of done the same sort of mathematics to say, well, if I lean in at over 111%, then I'm actually sort of net gaining, not not losing. The only one that hasn't is this one that already owns, well, in the diluted company, just under 4% of the company. So they've added 1 million shares, but it's only 7%, on top of the 14 million they already own. But you can sort of see here, like this one, for example, has really leaned in. They've committed to 1.8 million shares, which is uh, let's just get our good old calculator out, and 1.8 million times zero point zero 0.02, so they've chucked 36 grand into the pot, which, you've got some people that are obviously, in total 180,000 has been committed, but there is some level of commitment, which again, I kind of thought, well, actually, that's pretty positive. So there's also a talk around the renegotiation of the loan notes, which I saw as a positive, so that we don't have a cliff edge in 2026. That the you know that that's obviously there's a cost. There's a 10% loan note cost to these. The rate, the coupon remains at 10%, so that's not insignificant, but it gives breathing space for sales expansion. And in 2028, if sales have grown, um, perhaps along the lines of what other companies like Inogen have achieved, that we're talking there about, these guys are, so just to kind of show you, Inogen are achieving quarterly, nearly 100 million, or 88.8 million of sales a quarter. So, they've created a 300 and something million-dollar business that's valued at several $100 million, and that's kind of one of the other points I make in this article. I'll come on to that in a bit. I guess the next thing to say was about the like, let's try and work out what the break even looks like. And I have made some attempts in the past to kind of create a model of, if the sales are this, and then sales are this in US, and the sales are this in China, and they sell this many at this rate, and just kind of worked out a financial model, which, because things have got pushback, I haven't kind of updated that model today. I just thought, you know what, I'm not even going to, it would be sort of premature to try and be guessing that. So what I've done instead is I've kind of looked at all of their numbers. I've not made my own numbers. I've just used Belluscura's numbers. I've said, the revenue 4.4 million. So there's a Q4 1.1 million, because we know that the sales up to September were 3.3 million. They talk about an EBIT loss for 2024 of 7.4 million. So, obviously it's harsh, harsh result for 2024, no two ways. But let's kind of also then consider, they've obviously got that line of credit. They've got the launch of the Discover. They've got the PDAC codes, and I do sort of talk about this. They therefore say they expect revenue of not less than 12.7 in the coming year, and then 16 in annualized of over 16 by the end of December. So what I've done is I've kind of turned that into this. So basically, just as I say, taking the numbers that are given to us, rather than saying, I believe they're going to escalate their sales by X% and it's all going to be marvelous. I've just said, do you know what? Let's just take what the numbers are and not try and. The only bit I have done, to be fair, is that bit where they said over 16 by the end of 2025. That's not to say, unless you believe, oh, well, it's going to be static in 2026. There's no growth. I've kind of put in a bit of growth, 19, and I don't think that's particularly aggressive, but that's the only bit where I've extrapolated a little bit, but I haven't sort of said, oh, it's this many uh, POCs at this rate is equal to. I've not done any of that. And the margins, again, I've taken the existing margins. I mean, Belluscura talk about being able to achieve 70% gross profit margins. I've not assumed that. I've assumed 50. So I've kind of gone in, and I think even in fact this was 40 and this was 50. So I've kind of gone in pretty conservatively. I've not tried to over egg this. Overheads, and then sort of, yeah, I can see how it can become a bit to positive in 2026, and obviously a bit to positive would be roughly cash flow positive, bearing in mind that the bit of this is the the 10.9 million amortization and all of that stuff. Obviously, there's going to be interest on the loan notes and things like that as well. But the loan notes are largely to people who are shareholders, so there's a bit of wriggle room in terms of the cash flow of those 10%. In my opinion, and the amortization is a non-cash, which if we're only talking about tangible NAV, well, actually, that's all been written off. So there is no amortization and depreciation, and the plant and equipment's 0.26 million. So there's negligible, write-offs there. So, and then obviously, if this is sort of at or at break even or not making any profits, particularly, obviously the tax is pretty irrelevant as well. So, that adjusted EBITDA is not far off a net profit, excluding probably the interest. That or at least minus 0.6, including the interest payments. So that's actually really, that for me was, obviously this 12.7, I'm just basing on what they say, at least 12.7 in their announcement. But I think what kind of swayed me was this statement that they also made, which was like an RNS of frustration, I guess you could call it. Which in that RNS they said, if we'd had the PDAC codes, which didn't come through till 22nd of November, if we'd had the funding in place, um, between October and December of 2024, we would have smashed 4 million of sales. That's what they told us, that the expected sales, which were dependent on two factors. So they didn't happen. The actual outcome was 1.1 million, obviously much, much lower because the funding with Sally Port didn't come through till part period, and the PDACs didn't come through till part period. So that mess things up basically. So but common sense tells you that if you can do 4 million in one quarter of 2024, that 12.7 is there to be beaten. That that could easily be 16 in 2025, and that assumes that there's no growth. But what we're seeing is obviously quarter to quarter to quarter, lots of growth, lots of positivity. So, I sort of present these numbers as these are the numbers from Belluscura, but they seem to be wrapped in lots and lots of pessimistic assumption, which kind of flies against the other evidence they also present to us. So you make of that what you will. I've obviously not kind of glossed that up or kind of, but it's something to be mindful of. And that's kind of a big reason actually why I sort of looked at this and said, you know what, I'm going to lean in. I, as much as it, like it, it, it obviously the conventional thinking is, oh, you're throwing good money after bad, which is a risk. I mean, I'm not saying this is at all guaranteed, and I'm not giving you any investment advice. This is just me rationalizing my own decision and uh, providing it to you for entertainment purposes. But that's kind of what went through my mind, the logic that I applied to this decision. Just kind of moving on. Where are we on time? 30 minutes. I never seem to be able to do quick videos, and people say, "Oh, you should do quick videos." Yeah, how? You show me how I can present all of this detail in 3 minutes flat. Belluscura, it's amazing. Go and buy it. Stop. You know, that's the shorts version. But then I can't do that either because I'm not saying go and buy it. I'm just saying this is what I've done. What you do is entirely up to you. You make your own investment decisions. STG. So there's a license agreement between Belluscura and STG, and this kind of might have scared people a bit. And I kind of looked at, puzzled over it a bit, and kind of went, "Does that mean we're now?" Obviously, if they fail to get the fundraising, so I mean, they've obviously got the committed funds from people. People have oversubscribed to the secondary and the primary. Um, the question is whether the shareholders will vote for it. So yeah, I suppose you've just got to make your own decision there. But it feels to me, and obviously, if it gets thrown out, any follow on that you've done kind of gets thrown out as well, and the money gets. At least I don't believe it'll be anything other than that because obviously it's not passed, and then the money will be passed back to people that have leaned in, but I don't believe that will happen. I believe that there's nearly 50% of people that are committed, and sorry, I didn't say this before, I don't think, but have committed recently. This was the other thing that I sort of recent additions highlighted in yellow. So you've got people spending, you know, this was like at about 8 9p, people buying in with millions of shares. So 12 million shares at 9p. I mean, that's over £1 million that's somebody has invested into Belluscura recently, knowing full well all its problems, all its challenges, and kind of doing what I've done and rationalizing, looking at the numbers, looking at the opportunity, and saying, yeah, do you know what? Let's go for it. Now, obviously, these people, are they going to harumph and say, well, my £1 million, approximately £1 million, has now dropped to, I've lost zero point 0.7 of a million. I'm going to rescue my zero point 0.3 million. Or are they going to go, do you know what? Actually, we're going to, I mean, we know that somebody has committed to the secondary and overcommitted actually to the secondary. We also know that there's prospectively EIS. So EIS basically means that if you make any further losses, that zero point 0.7 million is kind of like a tax write-off anyway, is kind of how EIS works. So, or at least substantially works that way, that a lot of the losses can be written off as tax losses against other gains. So, and again, I'm not a EIS expert. That's just my reading and understanding of EIS. EIS being the venture capital enterprise industry scheme, I think it stands for. But it's VCTs, venture capital trusts, and EIS is a tax scheme from the government, essentially from the UK government. Anyway, so I kind of looked at all of this, looked at the profitability, looked at this STG angle, decided that I find it very hard to believe that they're not going to get, that they're going to sort of be any great distance away from the 20 million. So I mean, it's almost certainly that they'll be spending 400,000 rather than 4.5%. Because when I looked at the numbers, that's kind of what we're told is going to be the actual, and then that's the 12.7 over 9, three quarters of the 12.7 essentially, which by September of this year gets us to nearly 16 million, and 4.5% of 4.2 million is $189,000. So 400 is the greater. So I think that's how it's going to, so essentially there'll be a 66,000 cost for 6 months from September, but that's okay because that's just part of the royalties. That's kind of part of the cost of sale essentially. So if anything, that's actually a positive and a reason why it's going to be more like a 70% margin rather than a 50 or 40% margin. So I'd say as well, like when you look at the RNS, it talks about the reason why it's done the fundraise, which I don't think people have kind of read this properly. That The reason we are doing this fundraise is to focus on driving growth to increase market share. Now, nowhere before, and I've read these RNSs quite thoroughly, so I might be wrong on this, but I don't think I'm wrong on this, that nowhere before have they talked about potential partnerships. I mean, yes, they announced a partnership with Inogen, which is a kind of production and a sales partnership. They've done various announcements with relationships with DMEs, which are the equipment distributors in America and elsewhere. But I wonder whether this actually is something else or something further. Licensing opportunities again. We've not had any. Nothing is licensed today. I mean, we Belluscura is in a license agreement with STG, but Belluscura doesn't license anyone else to sell or to produce its products. It doesn't sell its technology to anyone. So that's interesting to me that there's an opportunity there as well. Um, New revenue streams through its Nomad biometric app. Now, in previous articles, I did talk about this and said, like, what if they turn this into some sort of subscription as well as equipment and accessories? Like that could be a whole new revenue stream, and poof, there it is in the RNS. So I thought, yes, there we go. Um, and geographic expansion. I mean, I guess we could kind of say, well, that's already been on the cards before. They talk about a next generation app where they're going to produce reporting for healthcare providers. Great idea, great next steps, rather than holding your iPhone and saying, look, my heart rate is doing this and my blood oxygen level is this, blah, 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 blah. You know, rather than waving the iPhone at your healthcare, at your GP, you can basically sort of produce a load of reports that sort of show, all the little graphs and little things and upticks, downticks in your health performance. Yeah, seems like a really sensible improvement to the Nomad app. Um, I also it just amazed me that nobody seemed to be talking about the fact that they are launching or going to be launching a new product, 20% more oxygen than the current Explorer. Now, someone did write to me and say, "Oh, well, somebody else has brought out a product that has more oxygen than the Explorer." Um, well, this kind of regains the leadership, 20% more oxygen than the current one, but also this one where it's a low flow for smaller patients. So this, I imagine, is a lower price point, cheaper product. But for people that don't need um, heavier amounts of oxygen, that this sort of light LF or light flow, I think it stands for, device will be another opportunity. So let's cut down the costs, but like for people that don't have severe breathing challenges, that maybe a cheaper, smaller product is okay. So it's filling a niche there as well, and that's going to be in the next few months, which I took to be really positive as well, because that will leapfrog it to best in class once again. It is in an arms race. It is in an arms race. I think this is massive news as well. And again, nobody seems to be talking about this. It's bonkers why they aren't. The fact that it qualifies for both of these codes, it's therefore eligible for reimbursement under Medicare. And that's, an $800 billion program. And if you've kind of looked at anything to do with Doge and all of that stuff going on, um, you know, th- there's vast sums of money being spent on Medicare, and yes, there's a risk that um, Doge will go in and slash this and slash that, but at the end of the day, are you going to slash the thing that's killing, the sixth biggest killer in the US? Uh, that's not a vote winner. That is not a vote winner. So I would wonder whether that will kind of escape any kind of targeting of Doge. Obviously, again, that's just my rationalization of what's going on. The market is 1.5 million Americans fall under Medicare. That have COPD or have that require oxygen. So when I did the maths, I kind of said to myself, well, and that's just Medicare. That's not including the private insurance and the 80 distributors separate to Medicare in America, which is then millions more. And then that sort of yeah. And I kind of talked about it, rationalized it. I said, well, look, 1.5 million Americans that fall under Medicare. The Discover device is $3,300 each. So we're talking about sort of going back to the RNS, $4 million potential. It could have been, would have been, should have been. 4 million revenue is only 1,200 devices, and 1,200 devices is one in 1,237 people per quarter. So in other words, in a year, that's selling kind of a Discover to about 1 in 300 Americans that need one, or in 3 years, you're selling to 1% of the population of people that need a Discover. In 3 years, that that, in other words, that 4 million of sales is very low. Actually, that's not many people. 1,200 devices, roughly, is not that many devices, and that's kind of, as I say here, that's not including the private sales, private insurance. That's not including Explore, the second product. That's not including accessories. That's not including product sales to countries other than the US. So, Inamax selling into China, Hong Kong, Singapore, Macau. That's all heads into the 4 million as well. So I kind of looked at it, I was like, well, 4 million seems actually quite low, because 1,200 devices is pretty small, I think, for something that, gets reimbursed, is reimbursable. I mean, you've got to make your own judgment on that, but I kind of looked at that and thought, well, and then, I'm going back to an older RNS, but Belluscura signed a deal worth minimum 55 million, which is a 10-year license agreement. So, over 10 years, that's 5.5 million a year of royalties. And this was for China, Hong Kong, Macau, Singapore, and this was for Inamax to sell Belluscura products into those territories on a royalty basis. So and Belluscura are also sort of looking at moving into other markets like the EU and the UK. So again, there's quite a bit here. I'm going to sort of just finish with this bit here. So I just covered some competitor products, what they cost, what they do, how much oxygen they deliver, are they PDAC coded or not, do they have an app? So when I looked at all of this, again, I was just like, well, Belluscura's kind of either as good or better than these other products. And anyway, the market size is vast and huge. That's why I include all these Inogen slides in here, just to sort of say, well, like 1 in 300 Americans via Belluscura, and if these guys are sort of doing, I mean, obviously they're selling a lot more, but 88.8 million, and if they're selling, and their selling prices are higher, by the way, but 88 million worth of devices, and theirs are about, I think, $3,600. I mean, they're selling 24,000 devices, so 20 times more than what we're talking about Belluscura selling. So, but it's still, there's plenty to go after in the market, plenty to go after in the market, as far as I can see. Anyway, that was kind of, that got me down to here, the conclusion. And the conclusion was that, well, I feel that leaning in is the right move for me. That's just me and my, this isn't investment advice. You make your own investment decisions, but that's kind of what I did. That's how I rationalized it. And I'm looking forward to seeing the news flow during 2025 for Belluscura. So it remains very much was one of my 2024 ideas. I feel, yes, it's had its setbacks, but fundamentally, the opportunity is still in front of it. Okay, that's enough from me. Oak Bloke signing off. Thank you for watching my 45-minute video. Apologies that it's so long, but hopefully it's useful. Cheerio for now. Cheerio.